Well, good morning, everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I am a coach with Charles Schwab, and I got busy looking at last minute trade setups as I'm watching the chat here. But today we're going to focus on two things. One, we're going to have an in-depth look at buy right covered calls because we have several example trades in our portfolio. We're going to do a little trade management. We're going to add a couple of new buy right covered call trades. And then, if I had 2 hours, we could do all kinds of stuff, but we have 45 minutes. So we've got a couple of trades we have to manage that have not gone according to plan. And I think that it's managing trades that don't go according to plan that can really make us or break us as far as our overall success as a trader. So we're going to address those. We're not going to sweep those under the carpet. And so that's what's on the agenda for today. If you are joining us for the first time, I encourage you to place a greeting into the chat because we link arms here together every Monday and Friday at high noon Eastern for 45 minutes. And this is a very active trading class. So we place lots of trades and we follow up on lots of trades. And if you're joining us for the first time or you're going, ooh, she's doing trade management, but I don't have those example trades on, no worries. Like I encourage everybody to follow along in their paper money accounts, but just listen because the concepts apply whether you have those trades on in your paper money account or not. Yesterday we did the mid-year market outlook. If you missed it live, and BJ confessed that he missed it, I missed it. And I'm looking forward to listening to it in the archives. As soon as it's available, I will post it on both X and LinkedIn. So if you're not following me on X, you're missing out, my friends, at Barb Armstrong CS. We also have Scott Thompson with us in the chat today. He's a friend, a fellow coach, and a manager actually in the coaching area. And so you want to follow Scott too at Scott Thompson CS, and then go over and find us on LinkedIn as well. So we have got a lot to cover today. So let's get right down to it. We do a lot of option trades in this class and know that options carry a high level of risk and aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn, to hone your skills, to make sure you have a trading plan, that you understand how it works, that you understand how the platform works, and you know how to both get in and out of trades. But know that there are some nuances and differences. One of the most significant ones for us in this class is that short options will never be assigned early in paper money, but that can happen in a live account. So we got to be aware of that. Okay. So we're going to have a quick look at the markets. Now, I don't do an in-depth market overview because Kevin Horner does a fabulous job of that 4 out of 5 days a week. So you're going to want to catch him at the market open for those. We're going to play some new example trades, and then we're going to do, as I said, some necessary trade management today. And then some exciting kind of some exciting trade management as well. Okay, so let's get right out to the platform. So here's our, 2-minute overview. So the Dow hit a new all-time high yesterday. Trucking along just fine. Thank you very much. Up over 8% year to date. The S&P 500, is consolidating, but up today and, not far off the all-time highs and, up about 8% year to date. And are we shocked to see a bit of consolidation after this incredible move from the end of March to, I guess, end of May kind of time frame? This thing moved up. Sorry, I wasn't paying attention as I drew the line. 20%. So, are we surprised to see some consolidation? We are not. And, this is, I'm posting something on X today about a pennant pattern and how to determine targets, but, a bit of a pennant pattern setting up here, might we say, and, bouncing off this diagonal support line today. When we look at our NASDAQ, come to me, NASDAQ, do we see something similar? Big move to the upside. 35% move to the upside in 46 trading days. Like, that's extraordinary. over the last 13 years, the NASDAQ on average is up about 13.5% a year. And this is a 30% move in 2 months. So yeah, are we surprised to see some consolidation? We are not. And then what about our small caps? Again, like the Dow hitting a new all-time high yesterday and looking pretty reasonable today as well. Now, what about the VIX? Our volatility or fear index still hovering under 20. So, not too shabby. Okay. Okay. And I do want to acknowledge, we had tons of people in, starting conversations before this class even before this class even started. And I'd like to, just acknowledge that and welcome all the usual suspects who are here on the regular, Sia and Marcus and Frank and BJ and Jana and Muriel and Austin and Josh and the rest of the gang. So thank you all for being so participatory, and know that we're going to be doing some voting here in the chat shortly. So be ready to participate. So we're going to start out looking at the friendly skies, and we're going to start with American Airlines. And so let me just go to a little longer term view. So we had this big period of consolidation, right? And we all know I'm big on, visually drawing things out. Oh, now that drawing tool has decided not to work this morning, so we'll use this one. So when we look at this, some might call it an inverted head and shoulders. Some might say it's a cup and handle. So think coffee cup, and we've got the steam rising here. Here's the cup, here's the handle. They obviously did not hire me for my artistic abilities, but it's broken to the upside. And, if we look at this and we say we've got about a $5 range here, if we go from 15, that would give us a target of around, potentially a target of around 20. And right now it's sitting at 1784. So, and this is something that's in our snack bracket from a trading perspective. Like we've got $7,000 we can invest here. So I'm just going to clear this. So if we, let me close that. So could we do a buy right covered call on this? And in this class, our position sizing rules is we don't want to risk more than 500 to about 550. And we don't want a position size greater than 5,000. And we started the year with 25,000. So 5,000 represents 20% of our account. And you might say, like, are you new? Like, are you nuts? Like, that's a really big position size. But when you have a smaller account, we wanted to be able to do things like buy right covered calls. And so we made that a bigger position. Now, if you had $1 million account, you might say, I don't want any one position to be more than 5%. And the reality is we wouldn't change that position sizing rule, even if the account doubled in size. We might not change it until it reached 100,000 and we were at that 5% level. But you can make your position sizing rules whatever you want. But I just wanted to address that and, not say that I think that's an appropriate position size for all account levels. But if we looked at this and we said, like, hey, could we sell maybe the $19 call? And you may say again, like, well, why wouldn't you sell the 20? Well, we could sell the 20, but we're going to get less for it. And I'm just thinking if we did a short-term trade and we went out to the 19, and you might say, well, that's only like $40. But that's a 2% gain. Plus, if we went out to the 19, that's a $1.20 gain. Like, so let's run the numbers. So if we looked at this, what's the most we can make? If we get called out at 19 and we're paying 1737. So if I take, subtract those numbers, that's $163. Well, I may not be a mathematical genius, but $173, $10 more would be a 10% return. So I'm thinking that smells a lot like about a 9% return. And what do you know? It's a 9.4% return that if we were called out, that's a 9% return in 21 days, 3 weeks. Like that's not bad. Certainly beats a poke in the eye with a sharp stick. And if you look at our example trading plan, and I'll show you where to find that, our example trading plan says, does this stock trade more than 1 million shares a day? Check. We're at 53 million already. Is the open interest and volume, is that at least 20 times the number of contracts we want to trade? Yeah, because how many are we going to do? Well, at $17, if our max position size is 5,000, our max position size would be, we might be able to do 3 contracts. So yes. Do we have a tight bid-ask spread? Is it 10% or less? Yes. And then if we look at the probability of it touching, that's 57%. And it's saying we've got about a 28% chance of it being in the money at expiration. So that means we've got like a 72% chance of it being out of the money. So which means we get to keep our 40 cents, get to keep the stock, and maybe do it again. Maybe then sell the August and maybe even sell the same strike, or maybe if it goes up, say $1 and it's at 18.50 or 18.80, this would still expire worthless. And then maybe we could sell the 19 strike. Now it could also come down. Do you know what I'm saying? Like we could end up losing money on this, and we have to plan for those times when we are not correct. Because that, I can guarantee you, if you trade on occasion, if somebody tells you they've never had a losing trade, either they're lying to themselves and you, or they've not traded very often. Because even the best in the world, like if you can be right 60, 70% of the time, like you're killing it. So you better get good at managing trades that aren't strong, that don't go according to plan. So if we did 3, we'd be at 5,200. So that would be in that margin of okay. So if we say, okay, we're okay with that. Now, when do we get out? Because otherwise we're risking $5,200. So if we come to the chart and we say, well, we see this support level here around this. If we look at the low on this day, what's our low? 1540. So if we took 1540 times 0.97, said if it went 3% below that, that would be 1493. So then how much are we risking? Well, 1737 minus 1493. We're risking $244 a contract. How much can we risk? Well, we can risk 500 to maybe 550. So 3 contracts would be over $700. Like, yeah, not a snowball's chance are we doing that. So we're going to make this 2 contracts because our risk then, because you have to make both your position sizing rules and your max risk per trade. And whichever one is the limiting one is the one you go with. So we're going to single order, first trigger sequence. We're going to right click and create an opposite order. And we know that if we have to buy this call back, that we're going to buy it back for less. It will be worth less, but we don't know exactly what it'll be worth. So, dang it. Sometimes my thinkorswim acts up a little. So I'm going to have to put in our closing order. We're going to close that out. I'll put it in after we place the trade. So we're going to just go in and place the trade, and then we'll put in our closing order. We'll add that. Can I just delete the one? Come on. Okay, we're going to delete the whole thing then. Okay, so we're going to do our 2 contracts, and we're going to put that in. Fire in the hole. Okay, so now we're going to come to our monitor tab and we are going to look at our buy right covered call positions. So, and we've got 4 of them already on the books. Now, the first one I want to talk about is TRIP, because TRIP has been a real trip. So we're at 13. We sold the 13 covered call. What does that mean? It means the most we can make on this trade is $13 a share. We're at 12.47 and we're 3 weeks out. Okay, so here's the question. Let's look at this on the chart. So are we regretting that we sold this covered call? No, because why not? Well, because we had this conversation with ourselves when we placed this trade on this day, that if this came up and hit our target, we would be happy with what we got. And, so if we come in here and we say, okay, we sold this for 11.73. So the most we could make on this was $1.27. So, but $1.27, that's over a 10% return in about 4 weeks. So we had this conversation, I call it the Divine Trilogy, me, myself, and I, and we said, if we could make 10% in about a month, we'd be happy. And we're now within $50 of that. And we've made over 300 bucks. And 300 bucks for us, it's not just a base hit, it's probably a double. So here I'm going to put this in as a poll in the chat. Do we take the money? Because what the market giveth, the market can taketh away. Do we close it out and say, I know we could make another $50, but we're happy with the $300 we have. So I'm going to put in a little survey. I'll go with whatever the group, I like to run a semi-democratic class. So here's the question. TRIP, do we take the money and run? The money, cue Steve Miller. Okay. Now, while you guys are voting, we're going to come and look at CSX. Now, you'll notice when we look at these, there's only one that has a quantity. When you see that quantity, it means there's no covered call associated with it. And that's because CSX had pulled back. And so we bought the call back. I'm not sure what day that was. Let's go look at CSX. So with CSX, we bought this call back on June 22nd. And so we made $45. And the thought process, the conversation that we had at the time on that, so we bought it back on this day. We said, well, it looks like it's bouncing, but what we'd rather do is buy it back. So we made a little cheddar. That's why I make that color. And it's come back up and it looks like it may be pulling back again. So here's the question, because the first time we sold the 50, today we hit 47.94 on this. It's hit 48. Maybe do we sell the 48? Do we sell the 48? And what would we get if we sold the 48, maybe just out to July? So the bid-ask spread is high here, but if we could get, we've got only 74 contracts, or do we even say, well, the current price is 47.36, maybe we sell the 47.50, the bid-ask spread, we've got tons of contracts here at that price, we get, between $1 and $1.25 for it, maybe we could get $1.10. We've already made $45 on this trade. And then if we come back to the monitor tab, we bought this for $46.97. We'd make another $53 if we had to sell it at $47.50 on the price appreciation. So now we're, close to $100. And then if we could make another 100, that would be like, we're looking to try and generate income. Our goal in this class was to generate $100 in income a week over the course of the year. And we've already achieved that. So now we're trying to go for an average of 200 a week. Okay, so this could make us $200, even selling kind of the at the money strike. And this is 3 weeks out, so we're going to do that. Okay. So we're going to sell one call at $1. And it's saying $1. It's like, well, let's see if we can get $1.10. If we can get the midpoint on that. Let's just see if it'll fill. And you can do this in a live account, like, not suggesting that you're trading this, but you can try and get a better price on things. And if it doesn't go through, then you can go in and change it. But that's what we're going to do. And then once that has filled, we can go in and put in our exit. Okay. And with American Airlines, I don't know if this will work to exit this. Now it'll work. Go figure. So we're going to make this a market that's good till canceled. We're going to come into our disappearing, reappearing conditional order sprocket. And we're going to say, hey, if American Airlines goes below 4308, we would like to exit. And that means we want to both buy back the call and sell our shares of the stock if American Airlines goes below 4308. We're going to save that, confirm and send. So we bought 2 contracts. We want to exit if it goes below 4308. Okay. That's in our buy right. So now you'll see that we have a little chiclet beside that. So we have an exit in place. And then once CSX, so we've sold our position on CSX. Why did that sell? I did something wrong. Maybe I said if it went above. Let's go look at the order. Okay. Oh, geez, Louise. So let's look at our order. Okay. I bet I said at or below. Oh, 4308. I was looking at love. So that's why it exited. So I'll go in and put that trade back in again. And our exit on American Airlines, let me go look at it. Usually what I do, if this were in a live account, I'd look at the price of the stock and make sure that that exit made sense. So it was, we had come up with 1540 times 0.97. Our exit should be 1493 for that, our stop. So we'll go in and put that one in again. This is American Airlines, and we sold the 19. I wonder if it'll I wonder if this will work this time. Opposite order, market, good till canceled, 1493. Sorry, guys. Now you know why it's so important. And usually what I do is I have this up when I'm putting this in. So I'll put this in and say, okay, 1493. Does that make sense given the current price is 1776? And had I done that when I put in an exit at 4308, we wouldn't have made that mistake. So there we go. Confirm and send. Yeah. And then with Trip, we have the group has spoken. 55 of you voted and said it was 96% said take the money and run on Trip. Okay, so we're putting that one back in again. And then we're going to come to Trip. And the first thing we have to do, we have to cancel this exit. Okay, so we're going to come to working orders. We're going to come to Trip, and we're going to cancel that order because we had a stop loss in place. And then we're going to right click, create a closing order to both buy back the call and sell the stop for 12.52, confirm and send. There we go. Okay, so we're out of Trip. The last one I wanted to look at in this space. So we've looked at CSX, we've sold another covered call, we've exited our position on Trip because we had a significant amount of the gain. Now, remember when I said if we don't have a chiclet, there's no exit in place, but on Nokia, we bought a protective put. And actually that put is up in value, which is not what we like to see actually. So let's come and look at Nokia on the charts. So this is now, it's been consolidating and we get that, but this is concerning when we look at this. So we're going to look at this again on Monday, but for now, when we look at our entry on this, we had a Harami pattern that was valid. That doesn't require confirmation. Had we waited for it, we would not have placed this trade, the next day because it came down. But if we look at this and we say we sold this call at 17, that's probably worth less now, right? So it's worth 13 cents. So we've got, a lot of our gain on this. Like we're up $232 on this. And so maybe what we do if we think that this support level may hold is we buy back the call and then when it bounces, we sell another one. Now, if we buy back the call today and it breaks below this support level tomorrow on Monday, then we may just exit this position altogether. Okay? Yeah, so somebody was asking, are we going to look at Nokia? We are. So we're going to come in. We still have this put at 13. Okay? So, we could, exercise our right to sell it. Because it's sitting at 13 now. So if it were to drop dramatically on Monday, we could exercise our right to sell the stock at 13. Okay. So just keep in mind that we have that choice. But for now, we're just going to buy back this call. So we're going to create a closing order to buy back our calls. Confirm and send. Confirm and send. And so kind of the point I want to make here is that when we're doing these, it's these buy right covered calls, it's not a set it and forget it trade. There are a lot of nuances in how we might think about these as traders and choose to manage them. Okay. And so, given we have a small account, we've got quite a few trades on here. And Fitbit is another one of them. And so let's have a quick look at that. And then there's two things that we have to manage. So this one is in the money. And when I first started, and I've seen this in the chat on occasion where people have said, well, it's in the money and I did this in a live account and how come I haven't been called out? Well, you could be called out at any time, but we're still 3 weeks away from expiration. you may not be called out even right up until expiration. Now, if you still own this position at expiration and it's in the money even by a penny after the close, then you would likely be called out and then you'd have your max gain. But if we look at where this is now, we're up $97, not too shabby. But, we bought this at 53.19, so we could make like $1.87 on it. And we're about halfway to our max gain. So, we're at 54.09. We still have another $100 we could make on this, so we don't have quite half our profit. So we're going to let that one continue to percolate. Okay. Okay. So there's that one. Now, the other thing we had to manage, NVIDIA. Okay, so NVIDIA, we did a long call vertical, and we say that we need to manage these every day. Now, Monday, we were down about 40%, and we said, well, we're just going to, wait and see if it bounces. Well, it has not bounced, and now it's back below this potential area of support. And it looks like it's trying to rally. And I mean, support is a range. It's not a finite number. But, we'd have to get all the way back up here. And while this, the average true range on this is $7.30 a day. So it is possible. But our rule is if we're down over 50%, we're out. And so to honor that rule, we're going to come in and, we're down 84% on this. So for NVIDIA, it's worth 42 cents. And you may say, well, if we've lost the majority of it, like for 42 cents, maybe we just stay. Well, it's actually $43 times 2 or $86. And, that's not nothing. That buys you a pretty nice lunch most places. I'm not talking the Montage at Big Sky, for a table of 4, but yeah, it's not bad. So we're going to, and this is honoring our rules. And so we're going to exit that one. Someone typed into one of the comments, I think it was on Monday's class, that they appreciated that I discussed the trades gone wrong. So somebody's saying, would you roll it? And my answer is no. And why would I not roll it? Well, because it's a losing trade. Like if I wouldn't place that trade today, I'm not going to kick a losing trade down the road. Like that's just denial. And that's how I look at it. It's just it's denial. So we're not going to kick a losing trade down the road. If it's a winning trade, like if we had a buy right, so on TRIP, if we go back to TRIP, could we have kicked that down the road and said, hey, you know what? Why don't we roll this out to August and maybe roll it out and up to 14? That might have been viable. I tend not to roll often because I'm teaching a webcast and because there are new people always joining that may have not had the old trade on. But we could absolutely have looked at rolling this one out and up. But a losing trade like NVIDIA, that's like a head in the sand approach. Sorry to be nasty about that, but that's, are you wondering how I feel about that now? Okay, so we have another losing trade that we need to address, and it's Apple. And again, we've got the risk of assignment. Now, on a buy right covered call, if we get assigned and called out, like we're doing the happy dance because now we've got our max gain, we've got our money back, like Bob's your uncle. But on Apple, like our strikes are at 305 and 300. This is now sitting at 277, and this expires in 6 days. 6 days. Yikes. So what are the odds of this coming back up to 305? Well, you know how you could see what the probability is? We could come out here to July 1st, because next Friday is a holiday, these would close out and say, what is the probability of this coming up back up to 305? So if we do 20 strikes and say, oh, like we had, like this is how far this is in the hole, my friends. So we're going to do 30. Close that. So this is saying you've got a probability of it being above 305 is like 1.37%. You've got a 2.7% chance that it's going to come up and touch 305 between now and the 1st of July. Like those odds are not stellar, my friends. And so this is one of those, are we going to roll it? No. No, we lost on this one. And we're $18 away from max loss, but you know what? We just have to say, yeah, that one didn't go according to plan. And we discussed this one Monday. Okay. Just a sec. That didn't look right. Apple, it's at 477. Cancel and replace. 478. You know what? Let's make this like 485. We're not likely to get filled at that mid. Maybe we could make it 480, but I'll make sure we exit this one. Now, we also had 3 trades that hit, 2 hit a target and 1 hit an exit. And they were Delta. So we did a long call on Delta. And I will do a trade management mini session on this one. I'm going to record it this afternoon. So we placed this trade on Monday. With gas prices going down, all the airlines are having a very nice week. Thank you very much. And it hit our target on Tuesday. Now, are we crying in our beer because it continued to go up? We could have made more. No, we said to ourselves, like, if this goes up, this is a very short-term trade. If this goes up and hits our target, we're happy campers. We made $121 on that, which was a 27% return on a trade that we were in for one day. Now, we also did a long call trade, and I did do one moving up of the stop, because with this strategy, you move up your stop at the end of each day. So I moved up the stop at the end of this day. It didn't need to move that day. I was going to demonstrate how to move up the stop in class today, but then it came down and hit our target. So on Citigroup, we lost $122, as it turned out, which was a 32% loss, on our investment. So those two kind of canceled each other out. And then the third one was Bank of America. And, we bought it on this day. We bought shares of stock. We sold it when it hit our target was 59. So on Thursday, it hit that target. And this is when you're really grateful you have targets, because if you'd come and looked at it at the end of the day, it was back down to 58.19. And we got out at, the 59 level, I'm pretty sure. We got filled. So we bought it at 55.67, out at 59.01. So we were up 6%, or $334 on that one. But I'll do a little recording that goes through the details. Okay. Okay, so CB is asking a question. It's like, when do you use close versus the low of the day? I always use low of the day. I don't use, oh, so I misspoke then. If I said close, so if we're looking at C, where we had this losing trade, and let's come in. So we placed the trade on this day, and we had our stop 1 ATR below. The next day we closed at, the low of the day was 143.14. So I moved the stop up to 142.14. And then the next day it closed at 143.18. So I just left it. Yesterday, the low was 144.82. So we would have put our stop at 143.82, which would have got us out a little earlier rather than getting out at, 140. It was 142.14. But I wanted to demonstrate it in class. So I thought rather than doing it yesterday after the close, I thought I would do it this morning. And then we got stopped out. So had I done that last night, we probably would have been stopped out a little earlier and lost a little less. Okay. So if I said, it's below the low of the close, it's actually, we move it up to, whatever the number is below the low of that day. Okay, so that one didn't work. But was it a successful trade? Like, did we move our stops up as we went along? Well, yes, that was the intention. And so this is just a trade that ended up not working. So it was a successful trade that didn't make money. And that sounds kind of weird, but there's also an example trading plan for the one ATR strategy. And let me just show you how to find that. So here are, if you've not subscribed to the Trader Talks channel, you'll want to do that. When you first come in, this is on YouTube, you'll see whatever's currently being taught. So if you come to playlists and scroll down to the trade management mini sessions, I've just created this playlist and I've grouped them. So this is just short videos on technical analysis. And remember when I said that bullish Harami didn't require confirmation? If you're saying, well, I didn't know that, well, you may want to come and watch some of these shorts. And then Scott, and I thank you for that, Scott, has already posted a link to this for the buy right covered calls and example trading plan. Here's one for an example trading plan for long calls with one ATR targets as well. Okay, and then we do a lot of, long call verticals in this class. Well, the market's been bullish, so we've done more long calls and short put verticals. And so if you want example trading plans, there are example trading plans for those as well. Okay, so I know that we didn't place as many trades as usual today, but if we go back and kind of queuing us up for Monday, so Love is another airline that's really been moving up. And so the disadvantage of placing a trade today on something like Love is that it may be due for a little bit of a pullback after this big run up. But if we sold a covered call today, we'd likely get more for it than if we waited till it moved back to support. And if we're thinking the long game, we might be willing to do that. So we'll look at that one again on Monday. Someone had put into the chat that they saw Microsoft hitting a support level. And this stock, poor little thing, it's been on the struggle bus. So it was downtrending and it seems to be kind of hitting this support level around this 350-ish range and bouncing today. So, can we trade something that is trading in a range? And this seems to be perhaps establishing a range between, 350-ish and, maybe 435-ish. So we may look at that one again on Monday also. And then we've seen some stocks that are kind of breaking to the upside, like Builder. You'll see an X video from me today on how to establish a target on something like that. Spoiler alert. So you may want to go check that out. Builder, I actually used Danaher as an example and showed that, you might set up a target based on the width of this pattern, around 222. So, and we may look at that, one on Monday also. But really our focus today was on managing both placing new buy right trades, managing the buy rights that were in our example portfolio to try and make the most of it. And then on our short put vertical and long call vertical, on admitting when we had a trade that went wrong and decreasing our anxiety as traders by one, admitting it, not beating ourselves up for it. Like, and you may want to go back and look at, and I'll do that in the short video, like, was the entry still legit, or did we make a mistake on when we entered the trade? Did we make a mistake on how we managed the trade? So these are questions that one wants to ask oneself, when we're managing trades, both the trades that went well and particularly the trades that didn't. So guys, have a really great weekend. Hit the like button. It helps move things up in the algorithms on YouTube so more people can find this content. Subscribe to the channel if you haven't done that already. We've got over 200,000 people on there. It's another free resource. Follow us on X and in the land of LinkedIn, Barb Armstrong CS, Scott Thompson CS. Get out and hug someone you love, folks. Thanks to Scott for being here in the chat. And thanks to the guys behind the scenes for helping bring this class to life. I appreciate it. Take care. Bye for now.